Hello, everyone. What a day. All right, so I'm going to go ahead and say it. We're done. It's absolutely over. The reversal of yesterday's rally on such strong volume. Tell you what, even if we don't go lower from here, there is no way in hell we are going higher from here anytime soon. The breakdowns today were across every sector, and everything is absolutely rolling over on huge volume. This is the worst I have seen stocks look since 2011, and it looks way worse this time. Because not only that, when we review the last 2 years, we can see that the market has rallied the past 2 years on lower volume. Every time it sells off, volume gets very, very large. And in 2014, that has exponentially increased itself. The volume on the pullbacks has been huge, and what we're seeing now this time around is just scary, scary, scary. We've already been preaching cash is king for about a month now, so that should already be done. The unfortunate part about today's reversal is that yesterday's big rally could not be ignored and took me out of over half of my hedges. Not a big deal. We'll put some of them back on, but the bottom line is, with the Fed in control, you can never be confident. If this was pre-2008, I would say without a doubt we are about to break wide open and crash hard. These are the exact same chart patterns that we had before the 2000 crash, the 2007 crash, the 1987 crash, the 1997 crash. The exact same looking charts. However, we don't know if tomorrow the Fed's going to freak out, going to lower interest rates again and announce a whole new round of quantitative easing. You did not have to worry about that before 2008. Now you do, so you cannot get confident here. But I will tell you, the reversal of the most recent action is about as ugly as you can get. Leading stocks. I follow about 600 total high quality stocks. I think we had like 10 to 20 up today. It's very, very ugly out there. And the breakdowns in airline stocks tells me that this Ebola virus thing is striking so much fear into the mainland and world public that they're just withdrawing from doing anything, and clearly it's making its way into the market. So for now, I really don't know what else to say except for stay away from buying stocks. There is no way I would recommend anything like XNPT. Yesterday was pretty good and it didn't work, but look at our recent long signals. SEMO didn't work out right away. Twitter, even though it didn't go anywhere, heavier volume, above average volume. So overall, I'd say that it's going to churn up here. So these are all 50% plus, 75% plus sells. Foot Locker didn't go anywhere. They're not full sells because they didn't fully violate. But the thing is that they didn't produce higher gains. But some of the breakdowns, look at Charles Schwab reversal. Look at Bank of America reverse that recent breakout. Look at Goldman Sachs reverse. And look at stuff like the semiconductor inverse leveraged ETF. I mean, we've got some strong signals, and I'm showing you SOXS because I'm going to put 2% of my account in it. If this was pre-2008, 10%. FXP, I believe that China is going to have to pull back too. Great signal. Once again, pre-2008, 10% signal. Right now, 2% signal. And then also, I'm not a chicken, even though I got shaken out of half of my SQQQ position. I'm going to go ahead and put 2% back on. And then if we continue to sell off, I will almost be 100% sure we are going to have an absolute carnage fest coming up very shortly based on what's looking like. I mean, the destruction out there is just amazing to look at. This looks gnarly. This looks really, really, really gnarly. I can't stress that enough. That's why I said yesterday following that amazing rally that you can't just go back in and buy stocks. You've got to let these patterns play out because the technical damage has been so severe recently that it's impossible to try to fight that. But what's crazy is that there's like a handful of stocks holding up, and if these 5 stocks break down, all hell's going to break loose. It's over. Apple is barely holding up. This is a horrible consolidation pattern. I would call this churning. The intraday reversal today, if this thing breaks the 50-day moving average, it's a screaming short. Short Apple. It just short it, short it, short it. Same thing with GoPro. GoPro has been the one stock that's held up. I tell you what, if you see this thing break down from these recent support levels, this thing is over. I already believe it is. I believe the intraday reversal we saw 2 days ago was very, very key with the current market. Now, it could easily hold up, base out, and break out. That's why I don't know. I'm just telling you that this is really bad, that we have basically 4 stocks holding up what's left of this market. The rest of the market has just completely died. Twitter is also one of them that's holding up. So we see Twitter go, we see Facebook go, we see Apple go, we see GoPro go. The last 4 horsemen that are holding up this entire tape, preventing this tape from already just shattering to pieces, because we already got tons of stocks in bear market territories. We've got new 52-week lows destroying new 52-week highs. The breadth is just about as terrible as you can get, but yet somehow the indexes are still above the 200-day moving average on the NASDAQ, the S&P 500, and the Dow Jones Industrial Average. That's pretty amazing, and that tells you that there's only a very few stocks holding it up. But the biggest tell that something's really wrong is that the Russell 2000, that was a very bullish 2B Victor Sperandeo reversal yesterday in the Russell 2000, right after breaking a new 52-week lows the day before, and to immediately fail that, and then to close below where the open was of 1075 to close at 1067. Lights out. Good night. Goodbye. So long. I'm just so pissed that we can't fucking have a free market, and then I can't operate the way I want to operate, because I would go all in. I would load up on puts here. Absolutely load up on puts here. Yeah, I don't know what else to say. This is about as ugly as it gets. What we're going to need to see tomorrow to prevent a bloodbath is another reversal. So we're going to need to see another huge volatile reversal on well above average volume, preferably higher than the volume today. And even then, it's going to take weeks to months to repair what's happened. Cash continues to be king. Now, the one positive event we have, we are 1 week away from historically a very bullish seasonal pattern. Now, I'll admit this, a few seasonal patterns have already come and gone without us rallying. We are in the 2nd year of a 4-year presidential cycle, the 6th year of an 8-year presidential cycle going into the 4th quarter. This has historically always been the most bullish 4th quarter during these 2 periods. It should have started by now. The fact that we're selling off, very negative. There's also the saying, you sell Rosh, you buy Yom. We're past Yom Kippur. Clearly that trade isn't working either. So now we're going into our very last seasonal factor, and that is the historical 4th quarter move going back to 1950. That starts after next week finishes. So we have 1 more week to go before we rally, and that means that next week there could easily be a gnarly crash, and then that gets everybody to finally leave the market, and then me, I'll be ready to go ahead and go buy the market the very next week if we do see that crash. If we don't see that crash, then I'm waiting for another uptrend to start. But either way, no matter what happens, no matter if we go sideways here, no matter if we bounce a little, no matter if we sell off, buying stocks in size and leading stocks is not a smart methodology. For new investors, cash is king. For professional investors, man, watch those charts intraday. Get ready to short. One that we've been watching intraday on the long side forever has been Lake. Ever since this Ebola virus fear started, it's up 154% in like right around 7 days. It appears with the volume surge today and that huge 52% move up today that it's it. The shorts have been run in on this one, and now intraday I would be looking for breakdowns. But the bottom line is today's reversal, ugly, absolutely ugly. So we're going to have sells. You can go to the new position space to look at that, but the buying or the selling, SOXS 2% in the IRA, FXP 2% in the IRA, SQQQ 2% add in the IRA. Going to go into the margin accounts. You're going to want to use the SMH put positions, the FXI put positions, and the QQQ put positions for the IRA. Or for the margin account, I'm going to have to see. You're going to want to make sure they're in the money. I don't know which ones I want to go into yet. That will be decided at some point this evening. Good luck out there, everybody. Hope everybody's in a heavy amount of cash.